Well, between the lockdowns and working from home, you probably put less miles on your car in the past year. On average, Americans drove 15% less, but they did not save nearly that much on car insurance. Some even paid more. Why? Well, News 12 senior investigative reporter Walt Kane breaks down those numbers in this week's Consumer Alerts.
There's a good chance you spent a lot less time on the road last year. But those lower miles may not have translated into lower car insurance bills.
Did your car insurance come down?
Very, very little. I pay it on a monthly basis. It came down by about, I think, $12 a month or something like that. And then it got reinstated back to normal.
He's not unusual. The feds say Americans drove 15% fewer miles in 2020. But according to a report by the insurance comparison company, The Zebra, car insurance rates only fell by 3.9%. Even here, where people are still working from home, rates fell just 3% in New York, 6% in New Jersey. And in 18 states, rates actually went up. It's enough to make some drivers say,
I think we're being taken advantage of.
So why are drivers not saving more?
Car insurance is based on a bunch of different factors. You can kind of think of them in 4 buckets: who you are, where you are, what you drive, and how you drive. So mileage alone is obviously just one part of one of those 4 things.
But shouldn't the lower mileage have made more of a difference? This is the part of the story where I thought I'd be calling out the insurance industry for taking advantage of drivers during a pandemic. But it turns out the more I dug into the data, the more I realized it's actually more complicated. The data from the National Highway Traffic Safety Administration shows while Americans drove fewer miles, they didn't drive more safely. In fact, over the first 9 months of the year, fatal accidents were up nearly 5%.
People driving in the pandemic, while there were less of them, were driving with riskier behaviors.
And Beck says that wound up impacting the rates paid by other drivers as well.
The more claims filed in an area, a zip code, or even a city, the higher rates will be for everybody.
So if driving less during the pandemic only drove down insurance rates a little, what can you do to save more? Paying in full instead of monthly could save up to 5% a year. Raising your deductible can save up to 10%. Bundling with homeowners or renters insurance could save you another 5 or 10%. And one of the biggest ways to impact car insurance premiums, improving your credit score, can make a difference of 15% or more. If you think you'll be driving less for a while, you can also switch to a pay-per-mile plan. But those usually mean letting your insurance company monitor your driving. So it's not a good idea if you're prone to going above the speed limit. And that's your Consumer Alert. I'm Walt Kane.